Nvidia certainly showed us the money this week. And to me, it seemed like a pivotal moment because it came the day after Palo Alto Networks, another high-flying name, disappointed on the guide. So what's the importance of that 24-hour period to the overall market, not just these two stocks, between Palo Alto and Nvidia?
John, I think a lot of people were kind of holding their breath related to Nvidia. Obviously, it's the bellwether in the space. They've kind of redefined what generative AI is. And I think people were really looking at that ecosystem that Nvidia provides. If they disappointed, a lot of other things were going to sell off, and the bubble, so to speak, would have popped. So they came out and actually blew away earnings again. And a lot of that now rally has increased. And maybe the cybersecurity story, still a good one, maybe is not as good as the AI story. But we've seen AI cybersecurity rally again as well. So I think Nvidia obviously drove it. And I think we're seeing some other opportunities now in the tech space to follow along because earnings have been so strong in tech.
But what does this say for the overall market narrative? Because for so much of the last 7 weeks, 2024 in this market, we've been hearing about, we need more breadth. We can't just rely on these big tech stocks. It's got to be about more than, the magnificent seven. And now we're back to talking about Nvidia again. Is that healthy for the overall market?
Yeah, it isn't. Yesterday's return, I think four stocks for 46% of the returns yesterday. So it does need to broaden out. What's been exciting to see is the S&P, 90% of the stocks have reported this quarter. Earnings growth is up 6% year over year. Last year, we didn't have a lot of that growth. NASDAQ's up 32% year over year earnings growth. So we're starting to see a broadening out. We're getting some momentum in some other stocks. The Russell 2000 is not dead anymore. Starting to show some signs of life. That's a positive sign. So I'm hoping it broadens out because obviously, Nvidia has done a lot of the heavy lifting as those other Mag 5, if you will, have as well.
Poor Tesla. Steve Liesman, is this the ideal scenario or close to it for the Fed? Because, get the sense they don't like to be the story. And right now, the market seems to be moving just fine. At the same time, the Fed's not having to threaten to hike rates, even as some of this overall economic data comes in hotter than many expected.
Yeah, John, I think you put it in a good way. I think the Fed is happy to be on the sidelines and let stocks really respond to what's going on in the economy, what's going on with earnings. That's a place I think the Fed prefers to be, but it shouldn't be lulled into a complacency here. What it does is going to matter. I think what Michael is talking about, and indeed you too, John, are talking about, may be something that is interestingly divorced from the economic cycle. This AI thing, I think, has a life of its own that if you were in a recession, I think the AI thing would go on. More and more I think about it, I think this AI thing is linked to secular labor shortage problems, as well as problems in supply chains. All of this should enhance productivity. That's going to be a big challenge for the Federal Reserve if there's a step change in productivity. But I think the Fed is going to have to act here. And I think when Michael talks about the broadening of the rally, I think it's going to be more linked to that. I think the danger here is that there's this erosion underneath from companies that have to refinance, from the CRE problem, from consumers having high interest rates. That's going to be a problem, and the Fed is going to have to respond, I think, because, in fact, rates are restrictive, and they're going to get more restrictive as inflation falls on a real basis.